Hello, my name is Tom Wallace, and I'm the managing partner here at Florida Funders, and I'm so excited that you're joining us today, and excited about our guest, Steve MacDonald, who's a great friend, great entrepreneur, and a very seasoned angel investor who you're going to hear from and meet very shortly. But before that, I just wanted to introduce you to Florida Funders. For those of you who are not familiar with us, we'd like to say we're on a mission to change Florida from the Sunshine State to the startup state. We're focused and on a mission to find, fund, and build the next generation of technology companies here in Florida. And we think one of the best opportunities we have in Florida is with our accredited investors, because Florida is tied for second, maybe third in the total number of accredited investors, only behind California and New York. But unlike California and New York, most of our accredited investors didn't make their wealth in technology, so they're not prone to invest in technology companies. They made their wealth in insurance or construction or real estate or whatever. So part of this series is really to help investors figure out why to become an angel investor, how to do it, and what the rewards can be. So with that, again, I'm really excited to have an old friend, person I've known for quite some time, and Steve, excited that you could join us. Before I turn it over to you, because you have a great background, and I want our audience to hear about that. I do have to say, as an angel investor myself over the last 25 years, Steve's company, his last company, I passed on investing in, and it was a big mistake. I think 55x is the numbers I've heard that I missed out on. But hey, that's part of the game, right? Go ahead, Steve.
Yeah,
introduce yourself.
Thanks, Tom. Thanks for having me here. So I guess a bit of my background was I went to school here in USF, and right out of college I got a job here with a local company called PNSI, and I worked my way up through sales management, and then eventually took over one of the divisions in there. Kind of got the entrepreneurial bug and left that company when my bosses told me that they didn't think there was a future in the internet. So I left that, and I started a company called Access Life that later transitioned into a company called TechHealth that we raised about $7 million over a couple of years. That was in 2000. Built that up a little bit. Had to fire one of my partners. We burned through all of our money. I got fired. It's just
I hate when that happens.
Yeah, the real startup story, and all the pain and anguish that goes along with that. After getting booted out of TechHealth, I kind of mulled around my apartment for a while, and fortunately, finally a friend came over, and he's like, "I got a really good opportunity for you. I need you to meet this guy." And so I did, and this person, the guy's name was Ron Warble. He said, I could really use what you did over at TechHealth, but I need you to build this company in the pharmacy space. So I don't know when. I had no money. I'd just been fired from my job, no future, and just decided, well, I got nothing else to lose. I've already jumped off the bridge, so as an entrepreneur, might as well try this. So I did that, found a partner, started a company called myMatrixx, and grew that up over 16 years and had a pretty significant exit a couple of years ago.
Yeah, very, very, very significant, I would say, and great story. Steve is being humble as he is. myMatrixx was a fabulous exit, very well known here in the Tampa Bay area. So Steve, on that entrepreneurial journey while you were building myMatrixx, and I think one of the things, we do have founders in our audience here too, what were some of the things that you learned, lessons learned as an entrepreneur that maybe even help you as an angel investor today?
One of the earliest lessons I think I learned was, it's kind of a complicated thing, but it's really learning to trust your gut. And one of the challenges early on, especially in a period like an internet crash and you raise a bunch of venture capital, it's like learning who to trust along the way. Because everybody has different motives and different motivations, and not to say that any one person was right or wrong, but having those different kinds of motivations led to different results and different outcomes. For me, getting fired was one of those things that at the time I think was a big surprise. You don't think that you're going to start a company and find yourself on the street, and but that happens. And for me, fortunately, that was a good result. It was probably the best thing that ever happened to me. But there were signs along the way in that process that I knew that this probably is not going to end well. And had I listened to my gut along the way, and that existed there, as well as throughout the whole experience of building myMatrixx, over and over, when you make decisions and your gut was telling you that that's the wrong, and you do it anyway because it's that's the logical thing to do. Over a period of time, you say, you know what, my gut was right, and you start to listen to that more and more.
Yeah, that's great. So, when and how did you start angel investing?
So, fortunately along the way, myMatrixx had grown enough, and I had kind of hired a CEO and had taken kind of a backseat role into a chairman role. Was really kind of looking for something exciting, and I'm always looking for the next new thing, and knew that I really didn't want to start another company, but angel investing was a way for me to keep my eye on the ball, stay in the game, and just an exciting way to participate in the new economy.
Yeah, I hear that a lot we hear that a lot from entrepreneurs, that they find that maybe they don't want to be a CEO anymore. They don't want to be the quarterback on the field, but they want to play. Yeah. And being an angel investor gives you that opportunity, not just to participate financially, but oftentimes to be the sideline coach. And I know you do a lot of that. You sit on a lot of boards and work with a lot of the founders in the startups that you invest in. In angel investing, there's obviously a lot of work to it, and it's part art and science. What are your thoughts on that? You said trust your gut when you're running a business. How do you look at that from an investing standpoint, and help us understand that?
That's, as you know, it's a question we get a lot of, art or science, and for me, it's a little bit like sales. Sales, in my opinion, is art and science, and I think that angel investing is very similar to that. I think as you go further down the investing spectrum, and you're in the very early stages where you're just part of friends and family, it's really whether or not do you like that person, and that's it. That's all you can go on. And you know that. I know that you've made investments in the people and people alone. As you move further down the spectrum, it becomes more science. So when you get more into later stage venture capital deals, there's a lot more science that goes into that, because there's a lot more traction. You've seen an industry or a company evolve. But in that early, between the friends and family and a later stage venture round, I think it's still more art than it is science. I think there's lots of mathematicians and venture groups that try to apply a lot of math to it. Mm-hmm. And I just came back from a conference a couple of weeks ago where basically they said you have to invest in everything, because the chances of you missing the one are probabilistically it's going to happen. So you don't know. You just got to throw your money at a lot of them.
Yeah. Interesting. So diversification is a big part of this. How many angel investments are you up to?
It's in the high 90s, I think.
High 90s. You've got me beat. Maybe by 2 times. I think I'm approaching 50. If you look at the data on angel investing and how to do it right, a lot of people are surprised by this, but even though it's early stage risky investing, angel investing can and does oftentimes outperform other asset classes like venture capital, private equity, and the public stock market. But the problem that I think the mistake many angel investors make is they don't diversify enough. They're not doing enough deals. They're not looking at enough deals. I'll use my brother as an example here. My brother, I said to him one time, well, you want to do this deal? He's like, I've done 3 angel investments and I went to 0. I'll never do that again. Well, if you only do 3, what's the chances, right? So that's kind of the opposite of the advice that you got. Let's talk about due diligence, because when you're trying to determine whether to invest in this founder and their company, how important is due diligence in that process, and what's the most important part for you of the due diligence process?
So, it depends. There are lots of, I say lots, but there are a number of people that have made a career out of angel investing. And I think that for the average angel investor, it's better to kind of find a group of people that are doing that professionally and tag on their coattails, because most people who are angel investing, it's just not the priority in their life.
Yeah.
So they're by diversifying your investments across a group of people that's their full-time job, yes, typically you're going to have to pay a carry or something along that, but those are the people that are doing the hardcore due diligence. Now, of course, here at Florida Funders, we do due diligence, and we have a process around that. So the idea of due diligence is an important one, but I don't think that most typical angel investors have the process necessary to make a lot of those investments and be successful at it.
Yeah. The Angel Capital Association of America has some pretty compelling research on this, that if you do less than 20 hours of due diligence on a deal, your probability for positive returns diminishes substantially. In Florida Funders, every deal we look at, we do well over 20 hours of due diligence. I think one of the things that I learned along the way in angel investing, because I started angel investing like you when I was still running a business. I didn't have time to do the due diligence. So this was before crowdfunding and places like Florida Funder, but I had friends that I could trust that would do the due diligence, and I pretty much rode their coattails. So, again, at Florida Funders, we do a lot of that for our investors. We like to say we take the heavy lifting out of angel investing.
And one of the things that we call it is signaling. So, like, who are the other people that have gone along with that deal? And typically, if you see that a venture capital fund, a well-respected venture capital fund has come in and they're also participating in that, you can kind of trust to some degree. It's not 100%, but trust to some degree that they've done some due diligence. So if you find yourself in a position that you can't do that, then you kind of have to rely on a third party.
Yes, good point. The other thing too with the crowdfunding sites, I speak for Florida Funders especially, we make all the due diligence public on our site, so our investors can look in and dig into a company's background as much as they want. So let's talk about that. So on the due diligence process, part of it is looking at the founders. What do you look for in a founder? What is it that excites you, and why you want to invest in this founder and not that founder? And is the founder the most important thing, or do you think it's also the size of the market, the product, et cetera?
So the founder is really kind of the most important thing. I guess for me, when I'm looking at investments, I'm going to look at the founder, maybe part of their team. For instance, like these days we see a lot of AI opportunities, and companies will come in and they'll say, well, we've got this kind of artificial intelligence, but then you probe deeper and they don't have a data scientist. So like
red flags there.
Yeah, that's a red flag. We're looking at the traction that they have, and is the founder realistic in their expectations as far as valuation? Are they realistic in their forecasts? Don't overpromise and underdeliver.
Mm-hmm.
Also looking for humility. People that come in and brag about their degrees or all of this experience that they have that's not relevant to what they're doing today. Yeah. That's a big red flag. And probably at least for me, and I think most angel investors feel this way, and and I was guilty of this, coming in and asking for too big of a salary is one thing.
Yeah.
Or coming in and you haven't quit your job yet, so it's still part-time for you.
Yeah.
And but I've got great ideas and I'm great and I deserve all this money. Those are red flags.
Yeah, we like to say we like to see a lot of skin in the game. And speaking of the humility and the ones who are braggadocious, their founders are braggadocious. One of the things we hear them say is, "Well, I've had 2 successful exits before this." And of course, we're going to ask, well, if you've had 2 successful exits, how much of your own money's in this company? And well, not very much, because I didn't. And then you start drilling in on those exits, and the definition of success is a little different.
Yeah.
So, we get that. Now, how about the deal flow part of it? Because I'll go back to my brother as an example here. I'm like, Tim, okay, you invested in 3 deals. How many deals did you look at to invest in those 3? Well, 3. And in Florida Funders, we say we look at roughly 50 to invest in 1 that goes through our process. Tell us about that. How do you look at that?
Yeah, I mean, you've got to have a lot of deal flow. When we talk about the diversification strategy of angel investing, if you don't see a lot of deals, you probably shouldn't be investing at all. I mean, that's put your money in a mutual fund, an equally bad return.
Yeah. Wanted to ask you about technology as a whole. So we're at this kind of point. You mentioned the internet earlier in '95. That kind of changed everything. And then 2006, Apple came out with a smartphone. The cloud kind of took off. We're kind of at that point again with a bunch of different technologies. You mentioned artificial intelligence, augmented virtual reality, Internet of Things, IoT, autonomous vehicles, 3D printing. We've got all these technologies coming on, blockchain. Are there any particular of those technologies? Are there any ones that excite you more than others, and you think are going to be wealth opportunities sooner than some of those other ones?
That's a great question, and it gets a little convoluted because, first off, like the thing that's going to make all of that possible is our processing power and Moore's law and all. So. On the hardware side, we've got 5G coming out. All of those things compounded together are creating these other opportunities. Mm-hmm. And, autonomous vehicles, genetic engineering, augmented reality, all of those things are relying on the processing power and then artificial intelligence. So without those 2 components, probably none of the other things are going to exist. Mm. And so what I am interested in, and what I'm spending a lot of my time doing, research and stuff, is around AI, because it's actually very confusing. And as angel investors in here, Florida Funders, we see oftentimes people come in and they talk about AI, and they're really talking about like statistics and probabilities, and it's not real AI. Mm-hmm. And so to kind of peel the onion back on what is real AI and what are the real applications and all of the necessary components to go into successful AI, the future is amazing. The future of AI is amazing. And so that's kind of where I'm spending my time right now, although I can't really say that. I don't know that necessarily you could say that AI is this one thing. Mm-hmm. And you can invest in AI. You're going to invest in companies that use AI to make very complex products or services or solutions.
Yeah. Yes, and I think you brought up a great point earlier, because we see this a lot from our from founders and prospective companies that come to us for funding. Is they throw the AI word around a lot, but when you dig deep and try to figure out, well, is this really artificial intelligence, or is it more business intelligence and big data maybe, or and I think your point about who's your data scientist, what's their background, that's a good place to start looking to see if it's really truly AI. One of the things that I know you do at times, and many of our investors and partners here at Florida Funders do, is you get involved with the company. So you don't just, sometimes, you're passive and you write them a check, but sometimes you take a board seat, you get more involved. How do you like to do that? Do you like to do that a lot? And what are some of the things that you as a board member, an investor, how can you help a company?
Yeah, so first question, do I do that a lot? I like to fish more than I like to go to board meetings, so the answer to the a lot question is not a lot. But I'm very opportunistic about...
Steve's a great fisherman, by the way.
But I'm very opportunistic about it. One of the things that I like about angel investing is it gives me a good window into those companies that look like they may break out. And so it's an opportunity to follow those companies for, a bit more of an extended period, a year and a half, and see what kind of traction they're getting. And usually along that time, somewhere in there, they're going to need to raise more money or recruit a board. And so those are the types of opportunities I look for to participate in a board. And the kinds of boards that I want to participate in are really companies where I think that I can add value, not just, and I do get invitations to be on boards in some really cool companies, but if I don't think I can add value, then I just pass.
Mm-hmm. And as a board member, do you like to get involved with coaching and mentoring the CEO and trying to help them? Because you've been in that role. You've had a lot of success doing that. I would think that would be one of the best ways you could add value to a portfolio company.
Yeah, and I think for me personally, that's one of the things that excites me about being on a board. I like working with young entrepreneurs where they don't understand the importance of having weekly staff meetings or, investor updates or some things that...
Accurate financial information.
Yeah, yeah. Oh, yeah, for instance, no, where's your checkbook? Oh, it's in her desk. We just closed $3 million and one person has a checkbook, putting some controls in place and bringing that perspective of, this isn't a free-for-all, this isn't a dorm party, Yeah.
Low adult supervision.
Yeah.
So, I know you've invested in a lot of our Florida Funder portfolio companies. Is that one, not to put you on the spot, but is there one in particular that you like that that you think could really break out, to use the term you just used?
Yeah, I think we do. I'm biased. We're an investor in a company, Finexio. It's in a fintech space, and they struggled for a bit, and they look like they're really on track now, and they're 80% growth rates, and I really like Pickup Now. That's another really great company that we have. They're growing tremendously.
With a woman founder, I might add.
Yeah, with a woman
Brenda
founder.
Stoner.
Yeah. So yeah, I mean, I think that we've got some really exciting companies that are exciting.
Yeah. So, Steve, unlike me, because I really don't do much of this, do a little bit, but you invest a fair amount outside of Florida, and you spend a fair amount of time in the Valley.
Yep.
And tell us about that. What differences do you see between the startup community and investing in Silicon Valley, San Francisco, versus Florida?
The founders in Florida wear ties a lot.
Not so much out west.
Not so much out west. But seriously, there's certainly value expectations or valuation expectations are different. A company that, might get a $20 or $15 million valuation on the West Coast is probably in the neighborhood of 7.5 to 10 here. Mm-hmm. There are more founders out there that have been exposed to rapid growth, and I think that excites them and incites them to go out and start their own company. I think here in Florida or in the Southeast, I think it's more more people that don't have that kind of background or experience. So, from a founder perspective, it's maybe even a little bit riskier than some of the founders that we see on the West Coast.
Do you see out there more deep technology where in Florida, I mean, we don't have a Stanford here. We don't have a top engineering school. We wish we did, but we don't. And just being objective, do you see more technology that's really cutting edge there versus Florida? How do you look at that?
I don't know. I think that would be a very broad statement. I wouldn't feel comfortable saying yes to that. I mean, certainly that you have the Stanford, and it is a hot spot for people to travel to start their companies. But like here in Florida, we have NASA. There's a lot of great tech coming out of NASA.
Good point.
The previous CTO of Google founded a company in Orlando. An autonomous driving company. So I think that there's lots of opportunities around here still for deep tech.
Yeah, we've come a long way. I think I've kind of lost track, but in terms of the number of unicorns that we have in the state of Florida, we've got to be pushing 10. I mean, Chewy, Magic Leap, which my nephew just left San Francisco. He's living in San Francisco to move to Fort Lauderdale to go work for Magic Leap. That's something we didn't see maybe not that long ago. We also have Fanatics, we have Park Jockey, No Before here locally in Tampa as a ConnectWise. So we really got a lot of technology going on. You mentioned the Space Coast. We've got the whole gaming industry in Orlando. We've got a lot of cybersecurity happening in Tampa. So I'm with you there.
I think one of the things, Silicon Valley gets so much attention because those companies, the unicorn companies, are consumer-facing companies. We don't have as much as that.
Yeah, that's a good point.
Chewy, is one consumer-facing company, but most of the others, breakout companies, are, we don't have that here.
Yeah, it's a good point. Okay, I think that's it, Steve. I mean, this has been great. And I really appreciate all you do for Florida Funders. Appreciate you joining me here today. Thank you to the audience for joining us. And if you have any questions about Florida Funders, please reach out to us, floridafunders.com, or give us a call, and we'd be happy to have you in and tell you more about Florida Funders and hopefully get you investing.
Florida Funders is an early-stage venture capital firm that blends a venture fund and a crowdfunding platform. They are investing in some of the most exciting early-stage technology companies in the state of Florida.